Hello, my brothers and sisters. Yeah, we're back, lads. Don't worry, it's not another month marathon. Don't get excited. I'm just, making a video. You know what I'm saying? I'm on the charts. I do need to speak on one little topic as well, which I'll do whilst I'm analyzing. And yeah, it's just going to be a nice, quick, not quick, probably be about 15 minutes. But thank you very much. Get you a girlfriend that makes you a tea because it's just lavalier. But anyways, charts, lads, charts and ladies. I hope you lot can hear me. Let me check if this is working. Anyone? There we go. Hello. So starting off with gold, yeah, because gold has been doing some funny things, mate. So remember during my month marathon, yeah, how I was saying all of this money here, all of this needs to get taken out, meaning price has to come above, yeah. All of this is just pure liquidity. So many sellers coming into the market, all here, here, here. And I just knew that it needed to get taken out, which eventually, after rolling over perfectly here, it has eventually come up, taken out this region, and this region here. But it hasn't taken out this region, which leads me to believe that gold is due to come up to at least 1995 now, just to sweep, just to finally sweep all of that liquidity. And then who knows, we could get huge sells after that. But yeah, that's just a little introduction. Gold has finally started making this way up. I've been waiting for ages. We're gonna clear the charts. Wait one sec. Gold reached this box. No, didn't quite touch this box. So what I think could happen now is we could range here, a little bit of noise, a little bit of noise. But can you see how these wicks have come in? Wicks, wicks. There's no candle bodies. And there's a lot of money down here. So what I'm thinking could happen is they entice a load of buyers right now, sink the market down to here, get some actual, if we can get some actual candlesticks into this region, then that'll be more of a confirmation for, this direction. But yeah, that's one scenario. Kind of faking out a load of buyers here into this region, collecting volume or whatever you want to call it. Liquidity, volume, money, whatever. But yeah, and then rally to the upside. But if we just clear our charts, let's completely start again just for the video. It's been 2 weeks since my last video, the month. I've just been literally like resting, recalibrating. So I'm not going to put today's low on, I'm going to leave that. What I am going to put is, so not yesterday, the day before that, the high, 2 days ago. We're putting that on there. One sec, we'll put yesterday's high on as well. Simply because if we're breaking this high here and we're staying above this target up here becomes our next point of interest for price to come into. So daily time frame, we've got the weekly, 2 days ago high here, this weekly black line, right? Which is there. Price come back beneath, doji, fat doji, and then off we go, forming new highs up here. So after we formed this new high, we've then come back into 2 days ago, that low of 2 days ago. Yeah, we've come back into it. Closed beneath it, wicked, and then market open, bit of a gap. We wick down again into this region, which, looking to the left, is this. So that massive liquidity, but like there's a point of, you could say it's a point of interest. Yo, what is all that about? You're not doing that around me. Move. No, shut up. Fucking crying like a baby. Dogs, man. Move. Okay. Well, yeah, as I was saying, so we created this little gap. We've wicked down. We created this low here. But this low coincides with this area of liquidity, you know? And the reason, listen to me carefully, lads. The reason that this area specifically is very important is because of two reasons. One reason is the time frame that we're on. We are on the daily, right? So the higher the time frame, the more significance these areas hold. Yeah. Secondly, if you look at this area, you see all of this build-up, all of this accumulation of orders, this noise, this consolidation, yeah, just crap. At the same time, as well as the crap here, there's also been chances for banks to manipulate, you know, and what's the word? Stop hunt, even in the noise. So after all the noise was created, we had this final pump, yeah, this doji wick rejection, and then we had a nice big 700 pip move, 600 pip move. Yeah. So this area here holds a lot of weight, a lot of weight. And that is why price now, after making this higher, has come back into this area because we are reacting from here. So now applying this to the smaller time frames, right? We got nice fat rejection into there. Okay. Nice fat rejection. Draw Fibonacci to the highest point, 70.5 rejection retracement, you could say. So that's valid. But one sec, just before one thing, I don't want to get too carried away. So we've got the weekly, the high of 2 days ago on the weekly, right? And then we've got this week's low being formed there. Coming on to the daily, I want to mark out yesterday's low. I need to not move quick, but move a little bit faster than I am. Yesterday's low, right? So boom. And if we line up the crosshair, you can see how it's come like at the bottom of this doji candle closure here, not the wick, the actual body, like it's wicked into the body. And then this wick here, again, comes into that body and then off we go all the way down. So that has wicked into there, that daily low, right? Um, the daily low's there. I'm gonna mark on the daily high now. Mark on the daily high, and here's another good thing. We are currently, so yesterday's and the day before, so 2 days ago, right? Please tell me I'm on the right time frame. Yep. 2 days ago, we made a low here. Okay, I'm gonna mark this on, and then we'll be able to use that today to take trades up here. Okay. So look, can you see? We made that low from here, right? And then wick, 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 wick. Now we're getting a huge body taking out this candle wick, and we're closing. If we can close above that high, that is an indication that we're going to come back up to this high up here. Okay, wick, right? And now we are finally getting a nice candle body above this. However, if we don't get the closure above and we get wick rejections and candles rolling over, it could make gold do exactly what I wanted, which was come into this lower region here. Because remember, of the 4 hour, remember this box. There's a lot of, it's like a big magnet point. So yes, gold is pulling up beautifully at the moment, but it could get forced down into here. So yeah, we've got the low of 2 days ago currently being broken. Yesterday's low, wick rejected, pulled in, rejected the daily as well. Huge wick. Now we're taking that wick out. So again, we stay above this, we're good for the upside. We've got a US low right here. US lows. So huge areas down here coming into play right now. So the lows have been respected. Boom. We're now coming up into these highs. We've got a London high there that actually starts from here. So yeah, pretty much, lads. Pretty much, right? Gold's coming up to here. But due to the place of where it is, there would be no entries. It's too late. If we entered now, it'd simply be a case of FOMO trading, which is fear of missing out. And no one gives a shit about that around here, mate. So what we're going to do is we're going to leave this. I want to see how these areas come into play right here. I want to see what gets respected, what doesn't. And then hopefully with a week ahead, we have a nice direction to go from. You know what I'm saying? Nice direction. But yeah. So that's quick gold analysis. Little quick gold analysis for you lot, you feel me, dog. Areas for where price can come to when we break this zone. I'm gonna say here that is a good region. I'm gonna mark this. I'm gonna bring this arrow all the way up because we are taking this to the next dimensions, lads. If we get that nice clean break here, then we're game for this. Absolutely game. But let's see, man. It could go horribly wrong as well. She trading is funny. Trading is actually funny. But there's just a lot. There's a lot down here where price can, you know. We come down, if we come low, this is where we're coming into. This arrow right there. Put money on it. But yeah, so that's gold. I'm literally just gonna keep it one pair for today. Just to keep the video cool. Because I'm not trying to go off topic. I really do need to talk about something, an important topic. Ethereum, well, tada, could be dropping here. But yeah, just low key want to talk about one thing. Pages, pages. Dun, 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 dun. Oh shit. All right, so when to avoid the markets, lads, lads and ladies. This is important for several reasons, not even two. I was going to say two, but there's lots of reasons why avoiding the markets is a good thing. No, no, no. Knowing when to avoid the markets is a good thing. Okay. Now, when you have taken 3 to 5 losses back to back, that is the first that's the first like bullet point that I'm gonna make is when you take several losses back to back, get yourself off of the fucking computer screen, mate. Stay away from the charts because when you do lose 3 to 5 trades, maybe more back to back, several things start happening and it all happens up here. One of them being you start doubting yourself, yeah? So now when you're analyzing, you're questioning every setup, right? Which is making you feel uncomfortable to even place the trade. So as in terms of your overall psychology, it fucks with it straight away. And then after you've got that, you've got the fact of so now you're doubting yourself. You're also feeling a bit revengeful. You wanna make that money back. You know what I'm saying? You've just lost 3 to 5 trades, whatever, how many trades it was. You're trying to make that back. So now it becomes a case of you could accidentally be forcing setups, creating setups in your minds that's not there, which leads to more losses. You literally end up losing more. Yeah. So as well as your actual mindset being tampered with and your flow and things like that, you also start revenge trading which can lead to FOMO because now like you're focused on making the money back. You're sitting there thinking, I need to make sure I do not miss a single setup. So now extreme FOMO trading starts happening, which guess what? More false setups, more losses. And eventually, lads, you'll end up blowing your fucking account. That's how it goes. That is the vicious um that is the vicious circle that takes place in someone's mind once they have accumulated a few losses in a row. So that's number one, yeah. Several losses back to back. A week. Take a week away from the charts. Don't think about them. Don't worry about them. You know what I'm saying? Just neglect it for 1 week. 7 days, that's it. Then you come back to the charts, you're refreshed. There's no revenge trading. There's no none of that. It's just you and your markups. So that's the next one. What is going on with this shit? Oh, why don't I just do this? Numbered or not? Can't lie, fuck the numbers. Furthermore, let me just delete this. I'm having an absolute mare right now. Start there. Bullet points. I'll have that. Several losses back to back. When to avoid the market. Several losses back to back. So yeah, what we just discovered. Discussed. If there is any family or friend like situations, I don't know what word I'm looking for right now. Family or friend situations slash problems are literally, conflict, etc. So when you're going through things with your family or your friends, either they're sick, or you're fighting with them, or they're dealing with their own shit and they're projecting their issues onto you, like therefore spreading their negative energy. If it's anything like that, stay away from the charts, lads and ladies. Stay away. You know why? Because your head is not clear. You're not clear. When you come to this screen, yeah, and you try and think about what you need to do and you're trying to analyze, the signals aren't gonna fire. It's not gonna process because there's too much going on in the back of your mind. You're not focused or clear-headed. Okay, so family or friend situations, problems, conflict, etc. Anything along them lines that is occurring, stay away from the markets. Right? Yeah, fucking dweeb. Stay a fucking way from the markets. You need your head. People don't understand. You need your head clear. Clearer than the flipping water. I don't know. In Greece. Shit, clear as hell out there, mate. Several losses, family friend situations. When you feel yourself getting bored slash irritated, with analyzing slash trading. So analyzing and trading obviously is two different things. Okay. Everyone can look at a chart and analyze. Not everyone can trade and make money. I am a prime example of this. I can analyze a chart spectacularly. Can I trade it? No. No, I fucking can't, mate. But we're getting there. That's not the point. So when you feel yourself getting bored or irritated, right? What happens with me when I know I'm hitting a plateau or I'm burning myself out? If I come onto the charts, I start yawning. My eyes literally like this is physical reactions, okay? My eyes will start watering, I will start yawning, and I physically can't, like my brain becomes clouded, fully clouded, and I can't think about what I'm doing. So when you're feeling like this, come away. 2, 3 days, reset yourself. Stop thinking about the markets. Don't be obsessed. Breathe, chill, come back to them a few days later. Okay. Several losses back to back, give yourself a week. Family or friend situations, wait until they are finished and resolved. Okay. And then the third one, when you feel yourself getting bored or irritated with charting or trading. Number fucking four. Number four, lads. After a major winning streak. Now you're probably thinking to me after seeing that, and you're thinking, this guy is actually just chatting shit. I'm trying to currently burp. Listen, you can think I'm chatting shit. I am not chatting shit. Okay, this one ear is very underrated, very important. Because this is the one where they can't do it. Right? They can't switch off. Their ego is too much. And that's not even making it thingy, you pussy hole. Their ego is too much. They've won, let's say 5, 6 trades on a trot. You know what I'm saying? They're up. They're happy, they're excited, they want to place more trades, they want to make more money, more. And that is where it becomes a problem. Because then you start forcing setups again, which result to what, lads and ladies? Result to losing, more losses. So after a major winning streak, decompress, you know, relax, take out some winnings, some profits, go and enjoy those profits. Again, breathe. It's not deep. The markets are not going anywhere. Okay, they're coming, they're always going to be there. So go enjoy your wins, right? Compose yourself and come back after a major winning streak. This is not a joke, lads. You need to learn when to avoid these markets. These four things here can save you blowing at least 20 accounts. It is no joke. After a major winning streak, just relax, enjoy it. Don't put no pressure on yourself to keep it going. Enjoy it. Be present in the moment. This is what this is all about, anyways. Being present in the moment of trading. When you're trading, you're here right now. Nothing else matters. The future don't matter. Getting more wins don't matter. The losses that you've had in the past, they don't matter. Nothing matters apart from what you're doing right this second. So after a major winning streak, enjoy it. Leave the charts for 5 days. Come back. Next one. Several losses back to back, family or friend situations, when you feel yourself getting bored, irritated with analyzing after a major winning streak. Why has this one not done the bullet point? So, what other ones are there that I can think of? Um, I can't really think of no more. I think to me, like these four things here are the most, I don't know, relatable, you could say, to my personal experience. Um, there's definitely some more you can think of. You know, anyone who's watching this probably got a couple more of their own that they could throw onto the list. But definitely these four things here, I would say are some of the most important times to avoid the markets. Um, yeah, I can't really think of nothing else for psychology. Like fighting with a family, that's the same shit. Getting bored and irritated, same as what I was thinking about. Um, oh, news. When major news is happening, like this one, not so much. But I mean, if you are aware of how brokers use news and things like that for slippage, um, higher spread, they use all of this to mess up your trades and make you lose. So if you simply avoid the markets at these times, you know, 1 + 1 is 2, you avoid the markets, you can't get robbed. Simple. That's it, lads. News, fuck me, what else? Um, like if I don't know, I guess you could say when you personally are unwell. Did I really spell unwell like that? When you personally are unwell. Because obviously, like if you're sick, you physically don't have the energy. You don't have the energy to be locked in. You need to be locked in. And I'm gonna say this is the thing. Um, avoid the markets if you are not 100% locked in. If you're not, I put 1,000 there by accident, but that just shows like you have. I don't think I'm making it clear enough. You have to be locked in, zoned in. You gotta be like here. You gotta be up here. You have to be there. If your mind is on anything else other than the charts, stay away from the charts. Simple, simple. Because this requires 100% all times. So if you cannot give it 100%, leave it. So that bottom one there, that's generalized. That is generalized. Like in general, all of these things tie into this because whenever these are happening, you're not 100% locked in. So this is one big, you know what I'm saying? They all fall into this one. But yeah, 1, 2, 3, 4, 5, 6. To me, them 7 bullet points cover pretty much everything. Losing streak, winning streak, if you're ill, news, family or friend situation problems or conflicts, and generally if you're not 100% locked in. Avoid the markets, lads, if you are experiencing any one of these 7 things. Okay. And that is how I'm going to leave it for today, I think. Because this is it's not unspoken of because people cover it, but it's very underrated piece of advice. Knowing when to be away from the markets is a very, very good skill. Very good skill. It can prevent you losing so much. It can prevent you falling into like psychological traps. Can prevent you from blowing accounts. And most of most of all, like most importantly, it makes you a better trader in general. Knowing when to be away from the charts makes you a better trader in general. And with that being said, lads, love, peace, and guidance. All right. I will see you in the next one. I don't know when that will be. Suck yourself 10 times. In a bit, lads and ladies. In a bit.